So you really came in because Bitcoin is dead and it's going to zero? Let's recap and get back to this episode. So keep an eye on this. Yes, we're held by the stochastic momentum, so it's going up, and this is on the daily definitely. So we'll have a couple of days, but tomorrow and after. So even if we have this massive pump in price action, please do flip this. And as we said earlier, this RSI oversold level, in the last video we mentioned this. This is the oversold here, right? Was the very low of our move, right? This was the very low at 15,500 and around 600. So that was the oversold on the RSI. Second oversold hit on the daily after having this resistance, right? The second one was the bottom of this move. Yeah, and this parallel channel has been with us for a while now. And currently we're doing the sliding down, like we're repeating scenarios being repeated over and over. So we are expecting, since we are at around this area now, we are definitely expecting maybe it to hit or to come close to the oversold territories. The thing that we talked about for 2, 3, 4, 5, 6 days now, and we repeated, is happening. One of the smart ways of looking into charts is pretending that you don't know anything, and you always have to put the best case scenario and the worst case scenario, so that we can always expect any way we or the market tends to go. So the market had a retracement, and we'll deep dive into Bitcoin now, but let me start with why is the retracement happening in Bitcoin. One of the many reasons is the dollar index, something we discussed, something we talked about earlier. And just a heads up, we broke this channel here. All right, so we broke the 103.636, and we know that the crypto market is inversely correlated to the dollar. So if this pushes up, we can expect a weaker crypto market. But think of it as a spring. So you pressure and pressure and pressure the spring, and then at one point it'll break and it will just fire crack. So we are expecting us to go to the next zone here on the chart in the next couple of days. This is the daily, so be aware that 105.399 to 105.893 is still in play, and that is another approximately 1.3 to 1.5% push up to the dollar, and we know that is gonna lead into weaker and some chop sideways action or slide to the downside if this continues to hit those marks. Okay, so we keep an eye on the dollar, we go back to Bitcoin, and we check what happened. So as we saw in what we were discussing earlier on a couple of days ago, and yesterday and the day before that, so that's what we were discussing, right? So we knowing in any direction we're heading is very crucial, is very important. So here, yeah, we said if this rejected us, then we are expecting us to hit the oversold, and we know what's gonna happen on once we hit the oversold levels. We knew here, right? We knew here, and we definitely knew here on this oversold button here. So we knew what happens when we hit oversold areas. So to keep things into perspective, this is one trigger that we are anticipating. What happened on the lower time frames? Well, on the lower time frames, we just hit perfectly the 200-week moving average, and we got bought up. But that can change, right? So I mean, currently we're just like, yeah, that's the 4-hourly candle, just like wick down, bought up, close above it, 4-hourly close above it. This is the 200 weekly moving average, which we have been talking about for weeks now, right? Weeks. So I'm not concerned now as much as how would the week close. So I'm interested in the end of the week to see the weekly candle close above this line, or else we will have to reevaluate. So on the shorter time frames, we had we had those couple of things. So we had this triangle, asymmetrical triangle, where we were resisted here, resisted. So those are the two triangles within the big parallel triangle, which we broke to the downside apparently. And now we will have to see how would the daily candle close and how would the weekly candle close, because again, nothing is confirmed for me, at least before the weekly candle is closed. But we are forming the descending channel here, which is supported here and here, 2 wicks, and is resisted at around those areas, with this being again when we said about the 0.65, when we said that if we didn't like break this to the upside, then we are to be expecting a move to the downside. We said it yesterday. So that's what happened. We rolled over and we moved to the downside. So, but not everything is gloom and gloom, and every dip to the downside is a discounted buying opportunity. I'm gonna repeat it over and over and over again. We DCA into weak markets. We sell into strong markets. And what to be exact, and the smart money, what is the smart money doing? What are people doing? So we go to on-chain data and just check how smart money is agreeing with what I'm saying. So this is on-chain, and we do discuss on-chain, and I really need to push some on-chain videos to add to the list, but you can find the list up in the top right corner. We were discussing a couple of on-chain metrics, and I promise I will add some more there so that we finish the series. So this is the Bitcoin sell-side risk ratio. So this is by CoinGlass, and they measure the pressure of selling, whether it was a high pressure or a low pressure. So it's not whistling now. It's not whistling. By that I mean, go ask anyone. If you're a cook, you would understand cooking in a pressure cooker and it whistles. All right. So when the pressure is too high, it whistles. When it whistles, you don't approach it, and you just be sure and be careful when you open it, because it is whistling. And whenever it's not whistling, then it's dead. It's not whistling. So here it's not whistling. What does this mean? Notice those deep dives in the selling pressure. When the selling pressure is low, means sellers are exhausted. That's on chain, right? So whenever we are in these deep territories here, notice around this area, that was the recent all-time high. That was the previous one, and that was the second all-time high. So here we were at around 2017, 2000, if my memory is right. So notice when we hit deep below the red line, means the sellers on a macro scale are exhausted. And usually whenever we are here, we need to be overconfident by buying assets, because bears are tired, and that usually reflects in price action. When sellers are exhausted, buyers are more powerful and they will catch momentum, and thus the price will start soaring to the upside in months and months to come. And we need to be careful whenever the selling pressure whistles. When it starts whistling, when it crosses the blue line threshold, that's when we need to be vigilant and cautious, because we need to start DCAing out of the market. Where are we now? We are almost at a very low point, just similar to this low point here, and that is right before our run to our last all-time high. So that is the 2019 area, and right out of COVID, and then that's when we hit this low, and currently we are at this low, but we are here. We are higher than where we were 4 years ago, almost 4 years ago. So whenever we are here, sellers are pressured. So this theory enhances our thesis of whenever we go low at this stage. I mean, look at this. Whenever we were low here, this area, that's the low of the price action. Whenever we hit oversold here, look at this area. That's the lowest point of the next of the or the coming price action. And currently we are at the lowest area at the oversold level. So probabilities of going up are higher than going down. That's what this is saying. And we rebounded perfectly off of our 200 moving average, and definitely on the daily. Let's go back to the daily. Let's check. So on the daily, if this fails, if this triangle fails, we have $25,798 or $25,800, 25,800, which is the wick from the low wick here at the 0 Fibonacci. And then we expect the $25,233, the swing high from this. Those are the recent moves that we are anticipating. But those will come with even lower sellers or lower or more exhausted sellers, and this will come with us touching the oversold territory. So for me, and this is not a financial advice, every time we go lower from the stage, we dynamic DCA, so we aggressive or we up our buying pressure. And definitely we're talking spot here, we up our discounted price, for me at least, and that's not a financial advice. So remember, the market is testing you, is testing me, is testing us. The market will test you. You have to be patient because it will chop, go sideways for a long period of time. It will bore you, and then it will scare you right before it rewards you. That's how the market goes. If you stick to the end, you get candy. If you don't get candy. You want candy? Stick around till the end. So that's everything for today. I hope you liked today's episode. If you do, please do consider hitting the thumbs up, subscribing, sharing this video with your friends, and all that good stuff which helps the algorithm of this channel. So that's everything for today. Thanks for tuning in. I will see you tomorrow. Bye-bye.